Good evening, ladies and gentlemen. You're watching the Stock Market Brief Show, and in today's very important video, we're going to be discussing a noticeable tailwind that's hinting at the potential for higher stock prices. But navigating that opportunity is obviously not without its challenges. So in this video, we're going to explore the critical influences shaping those prospects, including the intermarket relationships, the strategic insights from various banks regarding CTA positioning and corporate buybacks, and key gamma levels in the S&P 500. By examining all of these elements, we aim to provide traders with a more clear understanding of the current landscape of the cautious approach required to capitalize on these current market conditions. Before we hop into today's episode, I want to thank my patrons and my partner, Interactive Brokers. If you haven't checked them out, make sure to do so. View their campus. They have a lot of free online resources, including one heck of a good blog. They have a podcast. They have a Traders Academy, webinars, and overall, just a very good brokerage platform. If you want to check out the Swing Trader, it's only $9 a month to do so. Once you sign up through Patreon, sync your Discord up into it, and you get access to all of those benefits. Let's get into today's show. Alrighty tighty, welcome back to the show, everybody. We're taking a look over here. I want to revisit this and show you some of the things that I am seeing take place in the markets. Before we get into the tailwind that could potentially move markets higher, I want to look at some of the things that we're seeing currently taking place in the markets that do throw up red flags. And we discussed this on some prior episodes, but I want to revisit this. This right here is the stock market cycle in orange. Okay, the orange one. The blue one is the economic cycle. And I'm just going to stay really kind of focused on the stock market cycle. And as you'll notice, as the market moves to a top, you typically can see what are the performing sectors. And when we start making the turn down, we start to see other performing sectors. So I wanted to just really zoom out and show you what it looks like from a year-to-date perspective right now. If we're looking at the absolute, performance for a year-to-date perspective, you have things like communication services that have been leading the way, and not far behind that, you have energy and then utilities. So the top three I'm going to put focus on, and we'll go back over here. And what do you notice? You see communication services as we're kind of coming up the top, energy, right, as we are at the top, and then utilities is over here when we start making those turns. Now, if we look at the last 3 months, what do you see? Well, you see utilities and energy now leading the way. So, it's May 8th, so we're 5 months in. Now we're looking at only the last 3 months performance. And what do you notice, right? Energy is up here and utilities is over here. So now I'm like, okay, well, this is interesting because it really does seem like it's following this type of topping cycle pattern. And we don't, I don't know if this is going to be the top or the cycle or whatever, but we do need to at least be aware that from this intermarket perspective, and when you start to see cycles like this and what assets perform better, it could very well give us insight, and it did give us insight from 2021 into 2022 on that bear market. We talked about it a lot. If you haven't watched those videos, go back and look at them. So if we look at the last month, take a look here. What's the top performing sectors? Utilities, consumer staples, and healthcare. And actually, what's pretty crazy here is in the last month, right, you have utilities is really one of the only sectors that are up other than consumer staples, and then everything else is in the red. But the top three, XLU, XLP, XLV, and you got XLP, XLV, and XLU right here starting to make this turn. So I wanted to dive in one more step here and look at a weekly perspective of a relative rotation graph. This is a relative rotation, so relative performance to the S&P 500. You have 4 different quadrants. You have an improving quadrant, a leading quadrant, weakening, and lagging. And I'm doing it from last 6 weeks. So understand that this is from the all-time high, and then we dropped, and then we came back up. And what do you notice here from a tail perspective? Look at the length of the tail and the thickness of the tail for the power of those moves. And you have energy really going into the top corner. This is the best spot to be in, right, from a relative standpoint from this specific time frame. And then you have utilities still improving, consumer staples, and you have a couple others like XLB kind of working itself up there too. It's not that large of a sector, but nevertheless, take a look here down here at the last 6 weeks. You have the utilities and consumer staples leading the way from an absolute perspective, and then you have the S&P 500 here. So very few names are actually in the green, right? So I wanted to look, okay, that's taking it from this this perspective from this drop and this bounce. So what if we just take it from right here, from this bounce? And this is what I found out. What I see from the last 14 trading days, this move is moving up, and go figure, right? Utility is weakening a little bit. Consumer staples is weakening a little bit. Okay. And then energy is making a big move. This is the last 14 trading days into the lagging quadrant on this bounce. Now that to me makes a lot of sense. And that's what I want to focus on here. In just a moment, I'm going to show you some other charts. But the utilities just in consumer staples, albeit that they are going into a weakening quadrant, okay, which makes sense because they've been on a massive run from an absolute perspective. But take a look here at the performance overall in the last 14 trading days. I mean, utilities is up 9%. It's the top performing sector in the last 14 trading days. Okay, so I want to focus here on energy, and I want to show you more specifically this chart, which we've shared in the past. This right here, the one up top, is energy relative to the S&P 500. So what that means is when this line goes up, it means energy is outperforming the S&P 500. When it goes down, it means the S&P 500, which is this chart, outperforms the energy sector. And what you'll notice here is when energy starts to rise, right, or the relative performance of energy in the S&P 500, when this line starts to go up, look at what the S&P 500 does. It typically goes down or it sees more volatility. Okay, this was in 2022, the bear market, which we just priorly discussed in 2022. Okay, right, leading into 2021, we noticed energy getting stronger, and that gave us some insight. Okay, now you can see over here too, we saw this little bounce up there in the middle of 2023, and that caused a 10% correction in the SPX. And then more recently here in 2024, we started calling out this rise in the relative performance, and this was happening while the S&P 500 wasn't falling, and that gave us some insight to say, hey, you know, this potentially may actually cause some volatility to arise in the S&P 500. And it wasn't long after, and what do you notice? The S&P 500 did end up falling down. And then now, right, going back to this specific chart, as energy is the lagging quadrant, what do you notice? Well, this line is going down, the S&P 500 is going up. So I think where we stand now is to really start to pay attention from an absolute perspective. But there's another interesting aspect in all of this, and that is if instead of looking at the S&P 500 down here, I want to pull up the 10-year yield, because the 10-year yield has been backing off too. And what you'll notice here on this chart is, well, they look like they move hand in hand with the very tight correlation. So this is the energy relative to the S&P 500. This is the 10-year yield, and you could see they went up together, they went up together, they went up together, and now they're going down together. So one could conclude that if we understand where the 10-year yield may go, we may understand where this relationship with energy is going to be, right? If we're going to see continued strength there, if this is just a pullback, and potentially if we're going to get more continued volatility in the market. So let's look at the absolute just chart of the 10-year yield from an absolute perspective. And you'll see today we were up slightly on the day, 0.65%. We had a hammer candle the prior trading day. And as we were moving up to the top portion of this channel, we were talking about this negative divergence and the price momentum oscillator crossing over. Well, it led a move to the downside, putting in potentially a higher low right here. I don't know if it's going to go down further or not, but one could conclude that if we do start bouncing in the 10-year yield and we start going right back up to where we were, this could very well put pressure, like we previously discussed, on the overall market. And, you know, that could cause obviously just some more volatility and potentially bring in some potential opportunities back into the oil sector, energy sector too as well. So if we take a look actually at the 10-year yield, that's the black candlestick chart, and then the red line is oil. What I've noticed here on this chart in the short term is oil actually typically has been leading the 10-year yield, meaning that, hey, we went up over here, then shortly thereafter, oil went up. Oh, it went down over here, then shortly thereafter, the 10-year yield went down. Oh, it started going up right over here, and then the 10-year yield followed there shortly after. Well, guess what? Oil started pulling down not too long ago here in April, And well, the 10-year yield, it followed there shortly after. So the oil could be another important asset to watch to see if we start to bounce. And what I've noticed from an absolute perspective here is price action is getting very, very tight in the price of oil. And today, right, it actually was down pretty significantly on the day before the market opened up in the after night session. And then we closed roughly at the highs, creating a pretty nice outside trading day in the price of oil. So if this starts to rise and move up higher, this could be giving us foresight that we could potentially be seeing the yield bounce further here too as well. Now, if oil breaks down from this level, I'd say watch out, because then the 10-year yield could follow, but that could also potentially be a positive move for the overall some risk assets, which we've seen in prior episodes where we went over that. Now, if I take a look at another important intermarket asset, take a look at the dollar. The dollar, right, this right here was the jobs day, and it came back and it recovered a lot of its move, and it's following through. So the dollar is still, despite seeing volatility in markets, is rather defensive posturing. And the reason why I'm talking about the dollar is because this is also a very important asset to watch. You can see as we broke down in the dollar over here, right, going into 2024, so late 2023 into 2024, what did you notice the S&P 500 do? The S&P 500 started to rise, okay? And then the dollar started to move higher, and the S&P 500 actually, the correlation, that negative correlation kind of broke, okay? Then it went down, this kept on going up higher, and then all of a sudden the correlation changed back to negative where the dollar started rising again, and we saw some volatility here in the market. Now, what we're seeing currently is we're seeing a dollar bid back, and the S&P 500 so far is holding itself together rather well. So this correlation, right? Correlations, they come and they go. I think it's still going to be obviously a very important one to watch. As the dollar moves higher, it could very well put pressure. But the one to really watch now too is obviously what's going on in the bond market. Okay, now that is a perspective of things that could potentially be bad for the markets, right? It could be good for the markets if they come off, but also it could be bad because what we're seeing from a relative strength perspective, right? Utilities is bonkers. It's a risk-off sector. It's moving up pretty well. Now, if we start looking at gamma levels, 5,200, this is the call wall. This is where all the concentration's currently at. So what we've been saying here is if we get up to 5,200, we could kind of get locked and pinned around this area up until we get an option expiration and it starts to roll off. Or, right, if we start to break from 5,200, look for traders to start reaching out to their next biggest strike, which is 5,300. And that right there could be the potential opportunity playing into 5,300. But we'll discuss more of what can potentially help us drive in that direction. Now, if I look at the S&P 500 on a 30-minute time frame, this right here is the 5,200 call wall, and you could see the other day we came right into it, and then we got slammed back down, right? And then we came sideways a little bit. Then before the market opened up, we were seeing some pretty wicked sell-side activity, but understand we are still in positive gamma territory. So dealers look to buy the dip, sell the rip. And this is what happened today. We dipped, we bought it right back up into and around 5190, and 5190 is a very important level because that's one of the weekly expected moves for the SPX, and it's just kind of floating within this area. And there's also a 0-date level today. So if you're in the Discord, you saw that level on the screen today. Okay, if we look at the SPY on the 15-minute time frame, we are in a bullish consolidation, and notice how on the weekly EM, this is the upper expected move, we got outside of it, and we're just really just trading in and around this, right? When we tag these levels, these are, the happy place for the market. We ended up just kind of trading around there. So if we're going to decisively break from these levels coming into tomorrow, we need to start really getting above that daily expected move, if that's going to be the case. Tomorrow's daily expected move is 519.51, and then the low side's 514.87 So even if we were to come off to the lower daily expected move or even more, understand we're above a month-to-day anchored VWAP that is rising. We're above a rising 5-day moving average. And on top of all of that, we're in positive gamma territory. This is a market, as it stands, the current conditions say that we look to buy the dip. Yes, I understand that the relative strength in utilities, consumer staples, and stuff is showing some red flags, but in this current environment, right, we're above a rising 5-day moving average, and we're in positive gamma territory, so we have that going for us as it stands now. Now, if I look at the daily time frame for the S&P 500, this is kind of interesting here, right? So we had the high over here. We came down 6 or 7%-ish. We put in a new high. We had a higher a higher low, and then we got that higher high here on this day that we discussed on, I don't know if it was an episode that I just sent out to the Discord or if it was on the main channel, the one that you're probably watching from right now. But that's besides the point. As it stands, we are above the swing high anchored VWAP, and we're above the month-to-day anchored VWAP. So even if we saw sell side back into around 510, this could be an area of confluence to look for strength after to buy to go retarget those highs. And we've seen these type of sell-offs before where we get like a 6% move, a 4% bounce or so. It happened actually back over here when we were getting into negative gamma territory and that 10% correction where we saw this bearish engulfing candle. We moved down about 6%, and then we saw about a 4% bounce. Okay, so if I were to draw a line, could it be something very similar playing out? There's always that possibility as we're kind of locked in right at around that 5,200, 5,190 on the SPX, and we're at that weekly expected move. Okay, so what can be the potential tailwind to really start driving price outside of these levels? Well, Goldman Sachs, right? Goldman's Rubner on corporate buybacks. He is saying that the peak window or peak open window is from today, or which was yesterday, until June 14th. This is a note from them. I pulled this from the Gamma Labs news feed. And then Goldman Sachs research estimates $934 billion worth of corporate executions for 2024. And this kind of makes sense because we did already see what Apple did with their buybacks and how that responded. So this is a potential catalyst or a potential tailwind for the markets. I'm not going to read everything as it stands right there. Another was from Bank of America's global research, and it shows that the CFTC data shows growth in net longs futures proxy mix, but CTAs are extremely short. And you can see it's down here. And this could be a potential catalyst for CTAs to start to go long again because of its recent significant sell-off. You can even look at the SPX CTA positioning, and this one has come off far and fast, right? We talked about it way up here about how it's kind of maxed out, and to potentially, if we started hitting triggers, we can see some downward convexity, and that's exactly what we saw. So now as we're mitigating, we're coming down here, this could be the potential tailwind for the markets to obviously move higher. Another note was from UBS. They said from a CTA perspective, systematics are expected to be a tailwind for risk assets over the 2 weeks ahead, with 710 million in CTA equity demand. Overall CTA equity position sits at the 80th percentile versus the 30-year average, suggesting still room to add. All right, everybody, I'm going to close off here with the Sailor to Shift tool. The Sailor to Shift tool did flip negative. This is looking at the relative strength between Bitcoin and gold, and it monitors Bitcoin, right? So we're on the official sell trigger, and we're getting some sell side activity still through these levels. I'm waiting for this to flip back up, obviously, and that could present itself a good opportunity. Maybe this is just a consolidation for another rip in Bitcoin. We will see if there's more sell side, but as it stands right now, this is kind of just going sideways. That's all I got for you on today's episode, everybody. Hope it really kind of give you some insight into the red flags, but then also some potential tailwinds or catalysts to get this market really rocking and rolling. Hope that helps. See you later.